Hello there traders, welcome back to Commitment FX. Thank you so much for joining me today. Today is Boxing Day over in England, so first of all, a very Merry Christmas or holidays period to all of you out there. I hope you have enjoyed the relaxation that comes along with the holiday season. With that out of the way, let's get straight into the video in which we look at a super easy strategy which requires no indicators, no difficult data to analyze, just a very clear, simple strategy which everyone can get on board with, and it is by far my favorite and most profitable strategy to date. So join me over on the charts and let's get straight into it. Let's go. So over on the chart, we are looking at Australian dollar, US dollar, a favorite of mine. And the strategy which we're looking at today is called break and retest. It's very simple. It's very targeted towards beginner traders, and anyone who's not a beginner trader, an intermediate or an advanced trader will know how to trade this especially well as well. And what we're looking for is a continuation of the current trend. Now there's three things we need to look at before we enter a break and retest. The first thing is, what is the overall direction of the market? And if you're trading this on the swing trading timeframes like myself, so the daily, the 4 hourly, the weekly, even the hourly sometimes, you want to look at the bigger picture. If you're trading this as an intraday trader or a scalper, you want to look at the overall time frame which you're trading on and the trend which are appearing based on that time frame you're trading. So that's the first thing. What is the overall general direction of the trend? The trend is the friend, you want to capitalize on it. The second thing is, what are the banks and institutions doing? And the third thing is where are your key levels? It's as simple as that. No indicators, nothing plastered on our chart. So let's break it down. So over here on Australian dollar, US dollar, first thing we need to do is, what is the overall trend? Well, retail traders may think that we are currently in an uptrend, which we have been since the 30th of September. We're currently sitting around the beginning of November. So we are actually in an uptrend, but we need to see what the overall trend of the market is. So we're going to zoom that out and look on the daily. Well, on the daily, again, it's a good indication that we are in an uptrend, but actually we are in a downtrend. If we look on the overall perspective on the weekly, what we can see is the overall trend is quite clearly in a downtrend. Notice how I zoom it out and you can actually see the picture at hand, the bigger picture. And what we're having here is we've had this nice impulse to the downside from the beginning of May of this year. We've had this impulse to the downside, and now we're in this retracement period. How do we identify that this is a retracement period? We use the Fibonacci trading tool. That gives us a good indication from the high to the low. And what happens? Price is touching the magic number, which I call it. So the magic number, or anything above the magic number, is where we want to be trading a pullback. And we're looking to continue the trend. So we are looking to sell this particular pair. Now, the second thing we need to do, we've identified the trend. The second thing we need to do is, what are the banks and institutions also doing? To identify this, we go over to Commitment of Traders Club. If you're not a member, I'll leave a link below. We're going on the COT reports, looking at Australian dollar. We're trading around the first week of November. Over here on November, 2nd of November, the banks and institutions are minus 75k net positions to the short side. We can clearly see here that they have 19k positions in favor of long and 94k positions in favor of short. This is a clear institutional data telling us that the overall positions of the banks is to sell the Australian dollar against the US dollar. What more information do we need? We do not need any more information. Some of you will see that they have been opening some long orders if you're familiar with the data, and closing some short orders. Now that will affect the mid-term or the short-term perspective of the price, but the overall perspective is clearly to the downtrend, which matches on our chart in terms of the overall perspective, and we can see here on the weekly. The mid-term opening of some longs is likely this retracement here, this pullback. So knowing what we know, let's go back onto the daily, see if we can draw our major level, our third key aspect of this trading strategy. So we'll keep the Fibonacci on there because it matches up nicely with what we're looking at. And what we can see here is a very nice level in and around this area. So this is a liquidity area level. So we can see that the price is now fizzling out from the pullback, and we're looking to continue this to the downside. So that's what we're looking for. We're looking for to see that the previous support is now turning into resistance. So we've had the break of structure, we broke below the low, and now we're having the retest of the major level. So that is what we're looking for. Zooming this in on the chart further, we can look for our entry, break and retest. So we're going to look at this on the 4-hour. And what we can see, we've identified now that the market is actually going to sell off. We hit our major level, it's in line with the Fibonacci, and it's in line with the commitment of traders reports. So what we're looking for now is the smaller time frame structure. So on the 4-hour, what we can see is there's an interesting zone in and around here. Now, why is this interesting? Let's draw up the line chart. And what we can see, especially moving it backwards, is that this is a very important area in the market. We've had resistance here, which turned to support, support, support. And now once we get this rejection from the major level, we're looking to see it break below this level, come for that retest, and then we're going to enter. So we're looking for the break and retest of the next level. Okay, so now that we've identified that this is our major level, and sometimes it is easier to look at it on the line chart rather than the bar chart here, is because it clears it up. You can quite clearly see where the points are. So zooming back in on the 1 hour, some of you will like to enter your trades on the 1 hour. Some of you may like to enter on the 4 hour. It's entirely up to you. And what we're waiting patiently to do is for the market to break our structure. So break the previous lows, which gives us the continuation which we're looking for, the continuation to the downside, and then we're going to enter. So let's see this play out. Okay, we've got some very nice bearish pressure coming in here. These nice hourly chart patterns here show us a strong bearish pressure. We're looking for that break. Okay, here's our break. Fantastic. There is our break. Now we're looking for the retest of this area. Why would you not want to enter here immediately? Because we know it's going to come back for that retest. We know that that's where it's going to gain more liquidity from the area which we can see here on the chart looking left is a liquidity pool area. So we anticipate it to come back and grab some more liquidity. So let's see what happens. Okay, now we are looking for our retest. We've had the break. Now we're looking for our retest. There are some absolute rules of entry. Please see my previous video, which I'll link up here, on why you should enter and how you should enter and the entry patterns you should be looking for. I won't go into too much detail about the entry reasons. You can check out my previous video up here as what we're looking for to enter. But what I will say is, think of a retail trader. You're going to think that the market respects itself to the pip. So most retail traders will have a market order as a short order at this level here, because it is almost identical to the previous data looking left, with your stop order perhaps above the structure and your entry there. One of my philosophies is put your entry where the masses put their stops, and that's what we're going to do here. We're confident in our strategy and our analysis. We're confident it's going to sell off. We're confident it's at this area and it's in line with the banks. So what we're going to do now is we're going to put our entry where the masses put their stop. So we're going to move our entry up a little bit. Why do we do this? Well, because institutions are looking to grab your liquidity to stop you out before the market moves in your direction. So we'll have our entry reason there. We'll have our stop loss above structure, so above the previous high here. And in terms of targets, we're going to look to target, we can get rid of that now, we're going to look to target some of the lows around this area here, which is giving us a nice 1 to 7.5 risk to reward. So quite a nice trade. And we can obviously adjust this depending on how the market plays out. So we've set our entry as a pending order. We're confident in our analysis. Let's see if we get tapped in. Okay, we're tapped in immediately and we're already sitting in profit. Let's see the market play out. Okay, fantastic. It is moving in our direction. We're going to monitor this now on the 4 hour. And we'll also see if there's any other reasons why we can enter. So we're nicely in this trade. On the 4 hour, you can see that our target is very shallow. We might want to actually move our target to target some of these previous lows, which has given us a nice 1 to 25 risk to reward, which is much more favorable. let's see if we can enter a second trade on the break and retest of this structure. So we've got the low there. Let's see if we can break the low, which we hopefully will, and enter on a retest if it comes to it. So we've broken the low. There's our retest. We'll put another short position, let's say. We'll have a stop loss above and our target way down there. So we've got 2 trades running. Very close, we're still in. Fantastic. I'll pause there for the traders as well, just so you can get a better understanding of the break and retest. Here was our low, so we're looking for the low. We've broken the previous low. We came for the retest by this wick rejection and we continue. So what you can see here is we are breaking and retesting structure. So for those beginners out there, and apologies, I perhaps should have done this to start, the market moves in a downwards trend like this. And what we're looking to do, we're looking to capitalize on the break of the low for the retest, which will be here. So we enter here and then grab this continuation to the downside. So we're waiting for the break of the low, find that retest, and then enter our trade, whilst also understanding where the banks and institutions are looking to grab our money. So we're in 2 trades at the moment. This is looking very well. Let's see if we can hit our targets. Nearly there. And there we have it, traders. We smashed our target. First trade we entered a nice 1 to 25 risk to reward. The second one a nice 1 to 7 risk to reward with a combined pip total of, it's the first trade netted us 286 pips, and the second trade as well, which we entered into, netted us a further 225 pips. So we're looking at near enough between 450 and 500 pips from one particular Forex pair. To recap, break and retest strategy is super easy. Step 1, identify the true direction of the market. Zoom that chart out, look at it on the bigger picture. Step 2, what are the banks and institutions doing? Clearly, we looked at the COT data. They are massively net short, which means they are selling the Australian dollar. Number 3, find your key areas. We identified that the market has broken below the previous low. So we're waiting for the low to be formed. Wait for price to pull back, retest that structure. So you've got previous support, which will now turn into resistance. And then you can enter at the resistance level. That is what we're looking for. Super easy, very clean, very easy to identify. And the best thing about this particular strategy, it works on every single pair and every single time frame, as long as you know what you're looking for. Traders, I hope this video has been helpful. It is super easy to understand. Let me know in the comments below if you have any questions, and we'll see you guys on the next one. Bye bye.